Thanks a lot for that. Let's go across to Dabur now. Their earnings came out. The volume growth was probably a touch of disappointment. Lalit Malik, CFO of Dabur, joins us right now on the show. Lalit, good having you. Thanks so much for joining in. Good afternoon. It's something that we're probably seeing across the space as well. The volume growth hasn't really been as great, despite what some of your peers have done, which is bring down the pricing too. How has been your experience? Because your volume growth number 2 is slightly lower than what we were working with.
Well, yes, I think volume growth has been slower this quarter, primarily on account of 2 reasons. Number 1 is that the festival season has moved from October to November this year. It was last year in October. So as a result of it, all the Diwali gift packs base was very high in October, wherein this year it has shifted to November. So that's one reason there is a base impact. The second is, in our case, on account of food segment, there has been some supply issue from Nepal in view of their eco-political disturbances. The supply has been stopped for some time, so there is some impact on account of that. So as a result of it, in India, we have seen some pressure on the top line growth.
Does that mean that this is a one-off, that one should read this underperformance in volume as a one-off, that get corrected in the next quarter, perhaps outperform? So what would be the trajectory that would be reasonable for the next 3 quarters?
Sure. So if we look at the next quarter, if the situation in Nepal becomes normal very soon, I think we should be seeing the benefit coming back in quarter 3. Though there would certainly be some impact of the festival season, which will be positive, but we'll have to wait and watch to see the normalization in the Nepal with regard to our supply, and based on that, we'll be able to comment on quarter 3. Going forward, I think we do see a steady growth coming in quarter 4 and going forward, once these disturbances get normalized. So we would see the growth back in the trajectory of approximately 6 to 10% of the volume growth which we have been maintaining in the past.
To 10. Mr. Malik, closer to 6 or closer to 10?
Well, it would be, I would say, right now we will be talking about closer to 6.
Okay. So roughly around 6.5% is a good benchmark to go by with.
Well, I think that would be our efforts, and we hope things get normalized very soon.
My question is, I have no doubts about the operational picture, because the commodity costs are in favors of companies such as yours. Your EBITDA margins will go up or probably stay stable at this 18, 18.5, 19%, maybe 19.5 that you've clocked in. My question is really only and primarily about what happens to the top line growth. I know you just mentioned 6.5 if indeed Nepal does normalize. Are you saying that situation was the only factor, or do you think consumption by and large is not picking up too much of steam? Because the reason I ask this is because the couple of your peers who've announced your results as well before you, the categories may be different, but by and large FMCG, they also have not been able to show any kind of volume growth or the desirable kind of volume growth this quarter.
Well, I agree. I think there is a slowdown overall at an industry level, and we have seen the impact of that. What I did mention about the Nepal supply issue and the base is primarily, which is more applicable to Dabur as such. But overall, we have seen a slowdown with regard to the overall consumption or the demand from the consumer's point of view.
Now, I hear a lot of people speaking about the new launches that you are coming up with. By the way, the index is down about 1% now as we speak. But Mr. Malik, we hear a lot of new launches that Dabur is stepping up with, and apparently you're also picking up the pace of these new launches as well. Brief us in on how this would work, whether this would lead to an increase in advertising costs, and whether that will lead to a bit of a containment to the upside of operational margins.
Well, I think we have new product launches in the pipeline, and we will be coming out periodically with the new products. And in order to support that, we will be investing in the ad pro expenses as and when it is required. So we will continue to have our new product launch supported by the ad pro expenses to get the penetration of these products along with the existing ones, and we'll continue to keep investing in that.
And if that's the case, I remember talking to Mr. Duggal last quarter or perhaps a quarter before that, where he had guided for a volume growth of about 8 to 10%. If you are expanding that range to 6 to 10%, would it be suffice to saying that you are putting a lower guidance on volume growth because of the current demand environment slowing?
Well, as far as the India FMCG volume growth is concerned, we have been talking about within the range of 6 to 10%, and considering the current environment on an annualized basis, we will continue to maintain between the range of 6 to 10, and I would say more towards 6 that we would be considering on an annualized basis.
Okay, I was just kind of recollecting one of the past conversations that we've had. While Neeraj asked you about your new product launches, and that would be a key strategy, especially in an environment where you have competition brewing in this space, and just recently Patanjali as a brand went national. How are you looking at, what's your comeback strategy essentially to look at some of these regional brands which are taking center stage and scaling up?
Well, I think we have seen the introduction of the products in our categories, and we are watching the development on that count. Having said that, with regard to our product pricing and the quality, we don't see having any material impact as of now, but we will continue to keep watching the development, and we will be taking appropriate steps to ensure that we have our market share and the growth as we have already planned.
I think the reason why maybe Tanveer was trying to ask that, Mr. Malik, is that if we scan across reports, this is the market perception, and probably rightly so as well. You have a niche herbal-based positioning. There have been lower competitive challenges for you until now. But hypothetically, Patanjali is one name. With that launch coming in, it's exactly attacking the kind of portfolio that you have, rural positioning, herbal portfolio, so on and so forth. It more or less equal to the kind of positioning that you have. Would this lead to either splitting of markets, or maybe higher ad costs, or some sales pressures coming in for a company like Dabur?
Well, I think if we look at our consumption potential in India, especially in the rural market, there is a huge growth potential which is possible to be tapped. And coming from Patanjali, I think we would say that it will only supplement, because the growth potential is pretty vast. And we will certainly keep watching, as I said earlier, and we will be taking our necessary steps with regard to new product launches, with regard to our distribution network, with regard to pricing and on the quality. So we will be taking necessary steps on that. But having said that, considering the large population of India, we see the pie is being pretty large, and it is there for everybody to have their own share on that. So we work on that premises, and I think we will be working on our own product strengthening with regard to the quality and distribution, and that should help us to retain our leadership position in these areas.
Before I wrap up, then, just one final question from my end. You are seeing Patanjali as a serious competition to your business then?
Sorry?
You are viewing Patanjali as a serious competition to your business then, from whatever I infer of your answer.
Well, I would say that it's in some categories which are common. Patanjali is into many different kind of product ranges. So therefore, to the extent that they are into the common products, there would be same product where they'll be sharing the overall market pie. But with regard to the strength and with regard to the distribution growth, the network that we have, we don't see having any material impact of that in the near future.
10-second answer, Mr. Malik. Sales growth of 9 to 10% looks likely for the next few quarters?
Well, as far as our top line growth for Q2 is concerned, it is around 8.7% on the consolidated basis that we have, and going forward we expect to maintain and improve from there.
Let's hope that does happen. All the best for the quarters ahead. Thank you so much, Mr. Malik, for taking the time out and joining us. Out of time, we wanted to speak about Namaste and foreign markets as well. But we pretty much got the gist of what Dabur wanted to say, a flat in the quarter.